Hello and welcome to another update video about Sand. So here, a similar situation as we have it on many other coin or altcoin charts. We came down quite strongly here and turned around on the 10th of March, at least temporarily. And so far the price has failed to follow through really. I mean, we have basically a 1-2 setup, 1-2, and then a possible additional 1-2 setup. So we can actually put labels on this. Lower degree price action, not terribly clear, but you can count this as a 1, and then let's see. I mean, you cannot rule out that this is just a high B wave. We still have that situation on many cryptos. It is just a little bit unclear. You just need to know that sometimes in these corrections, you don't really know what kind of retracement we need. Do we need a deeper one? Are we okay with a shallow one? For now, I think we can go here with the idea of a 1-2, 1-2 setup, knowing though that it might need that deeper retracement, because what we cannot rule out is that we get this wave 2, circle wave 2, that might need to be reset to over here, right? So basically this over here, and then we have an A, an overshooting B, and a C wave down. We cannot rule that out because we need to see how far or how much of a retracement does, for example, Bitcoin need, how much of a retracement does Ethereum need. And at the moment, you know, they're grinding into Saturday, just sort of making slowly lower lows and lower highs. Some just moving sideways. But for now, this is a valid assumption that we have another 1-2 setup here. The move down certainly looks corrective. Yeah, very choppy price action. Looks very corrective. The movements to the upside have been impulsive. So best I can tell at the moment here is that this is a couple of 1-2 setups. We've got that on all altcoin charts, right? So the question is here, you know, do you have enough alts? Just to prepare yourself, but yeah, that's entirely up to you, of course, because if this works out, then we should get those third wave rallies. Now, of course, if we lose the support areas, then these scenarios will get very unlikely. First of all, if we drop below 60.77 cents, we are most likely going to morph into this alternative wave 2 scenario, and this lower support box is going to be relevant again. So what does that mean in terms of key support levels? First of all, key support is 60.77 cents. If we lose this level, we're most likely going to morph into the higher degree scenario. We'll reset wave 2 over here. Had an A, B, C structure. The C wave would then be an ending diagonal, and the following support levels would become relevant. 58.7 cents, 56.8, and 54 cents. These are the relevant scenarios. And it just needs to show some kind of a reaction now. Well, what would be the first signal that we have bottomed here? In my opinion, best signal would be that we get a break above the next relevant swing high, so 67.4 cents. That would be a good one to get first good indication that we start to turn around, or 67.4, plus minus a few, well, fractions of a cent depending on the exchange. But for now we're heading down. I mean, there's no point in trying to label the subwave structure here. It's just too messy. I can give you probably 10 different counts for this. That's pointless. It's not very clear. However, what is interesting is, let me go make that larger. You start to see those bullish divergences on the chart, right? So you have a series actually. Here you have a low, then another lower low, and another lower low. And on the indicator, the MACD, you've got a higher low and a higher low. That is a bullish divergence on the 1 hour chart. We don't see it on the relative strength index, but on the MACD, you do see it quite clearly. On the 4 hour chart, we see it, however, on the relative strength index, where we made a lower low here and a higher low in the indicator. And the 4 hours doesn't show it though on the MACD. It shows it, however, on the MACD histogram. So we do have some divergences, but now the price needs to, there was a dog, but now the price needs to obviously follow through. We just switch the volume off, don't need that. We continue to be below these two moving averages here. So you can actually see they are the 50 and the 200-day moving averages. We recently had here a so-called, you can call it a golden cross, where the 50-day moving average, which is the white line, crossed above the blue one. That's a so-called golden cross. It's not a reliable indicator for me. A lot of people like it. It's something that just simply doesn't work. It works like 50% of the time, so it's a bit pointless. But still, it's worth mentioning. Sometimes it can be a nice signal, but it's just something to mention. A lot of people get crazy about these, but yeah, they often haven't worked in crypto, so I'm not emphasizing them. Just worth mentioning while we have them on the screen here. Anyway, important though that we are below these moving averages, so they obviously are resistance that need to be overcome on the upside. And yeah, I mean, be prepared here for possibly a deeper drop, but as long as we are in the yellow box, we can just turn around. Cryptos turn around at an instant. Should it turn around from here and start to rally, then this third wave would play out. And we're talking here about the 1.618 extension of around 87 cents for the white third wave. And the yellow third wave should then take it to an extension, maybe around 93 cents. So let's see. For now, the market is looking a little bit tired, and it looks like it might need a little bit more of a retracement. However, we see these bullish divergences, so it's worth observing that over the weekend. Okay, that's my update about Sand. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.